Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a couple high-yield dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and happy Friday. Today we're taking a look at two stocks that have an attractive high-yield dividend. Plus, they also come in with a strong buy consensus from Wall Street Analysts. So we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. Before we get into that, this is your reminder to make sure you've downloaded the TipRanks mobile app so you can stay up to date with all the latest stock news and access your favorite investment research tools on the go. Links are in the description down below. Let's jump right into our two high-yield dividend stocks. First up, we're taking a look at Frontline. They trade under the ticker FRO, currently priced at $23 per share. The stock has seen growth of 56% over the past year and has climbed 13% in the last 3 months. Frontline is one of the world's major oil tanker operators. The company sails the global oceanic trade routes with a fleet of 66 modern tankers, ranging in size from the 110-ton Aframax vessels to 157-ton Suezmax vessels and giants of the tanker industry, the very large crude carriers. Frontline does run a modern tanker fleet. While the oldest vessels in the company's inventory were built in 2009, most of their fleet is less than 10 years old. They've been in operation since 1985 and in recent quarters have seen a sharp increase in their total revenues. Frontline does pay a quarterly dividend, and their policy is to distribute dividends that are close to or equal to their adjusted earnings per share. Their most recent quarterly dividend was 37 cents per share, and their trailing 12-month dividend yield comes in at 12.35%. They reported their Q4 and full-year results at the end of February, and the company came out with their strongest annual results in 15 years. For their Q4, they reported earnings per share of 53 cents, coming in 2 cents ahead of analyst expectations, reported revenue of $415 million for the fourth quarter with a profit of $118 million. The company also entered into agreements to sell their 5 oldest VLCCs. One analyst from Jefferies recently upgraded the Frontline stock to a buy, noting that tankers are entering year 3 of strong earnings and the oil market balance is shifting further in their favor. The firm sees continued compelling value in owning tanker stocks, saying they trade at just a 0.8 times net asset value and at a sizable 22.5% free cash flow yield. With 5 current analyst ratings, the Frontline stock does come in as a strong buy, based on 4 buy ratings and 1 hold. And the average price target comes in at $28.65, which would imply an upside potential of 24.4%. Looking down below, we can see that recently upgraded rating from Jefferies with an upside of 30%. Our low end is the hold rating here with a downside of 3%, and a high-end price target from Kepler Capital with an upside of about 52%. Our second high-yield dividend stock is Kimball Royalty Partners. They trade under the ticker KRP, currently priced at $15.56 per share. They have seen some ups and downs over the past year, but overall are up about 22.9% and have climbed 4.6% in the last 3 months. Kimball Royalty Partners is an energy firm based out of Texas. They focus their operations in various areas of interest across some of North America's most productive hydrocarbon regions. Specifically, Kimball buys mineral rights. They hold more than 17 million gross acres across 28 states and has a footprint in all of the major onshore oil and gas basins of the continental U.S. The company owns lands, wells, and royalty rights and allows third-party operators to conduct the extraction business. They then receive royalties on the oil and gas produced and use those funds to buy additional holdings, generating increased royalties. They also pay their dividend out on a quarterly basis, and their most recent dividend was 43 cents per share. Their trailing 12-month dividend yield comes in at 11.2%. For their fourth quarter, which they shared on February 20th, they did fall short on earnings expectations. However, on the revenue side, they did see some records. For Q4, the company reported earnings per share of 14 cents, which did fall 13 cents shy of expectations. However, they did see record Q4 run rate daily production of barrels of oil equivalent, which exceeded the high end of their guidance, and record Q4 oil, natural gas, and natural gas liquid revenues of $83.9 million, which increased 21%, plus record Q4 consolidated adjusted EBITDA of $69 million. 5-star analyst Neil Dingham from Truist Financial is one that has a buy rating on the stock. He said that the company's favorable dividend payouts, which are expected to increase, play a crucial role in his buy rating, and that he forecast a high dividend yield in the near future, anticipated surpass that of its peers. On top of that, the stability of rig activity and the potential for production growth due to a high number of line-of-sight wells further bolster the company's prospects without the burden of capital or operational expenditures typical of MLPs. Kimball Royalty Partners does just have 4 current analyst ratings, but they do all come in with a buy. And the average price target comes in at $21 per share, which would imply an upside potential of nearly 35% from current prices. Looking down below here, we can see our 4 most recent ratings here. On the low end, we have Bank America with an upside of 9%, and on the high end, TD Securities here with an upside of 60%. So that is our quick look at 2 strong buy, high-yield dividend stocks. Let me know your thoughts on these companies in the comments down below and what other high-yield companies you love. I know there's some great ones out there. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at. So please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.